Hello everyone, welcome back to my YouTube channel. In today's video, we will learn about two important terms in accounting. They are provisions and reserves. So let's start with provisions. See, there are certain expenses or losses which are related to the current accounting period, but amount of which is not known certainty because they are not yet incurred. Means there are certain expenses or losses, they are related to the current accounting period, but the amount of expenses or losses which is not known certainty because they are not yet incurred. Because they are not yet incurred means we know that something is going to happen, but we don't know the exact amount. Clear? We know that loss or expenses happens in the future, but we don't know the exact amount of that loss or expense. Clear? So, it is necessary to make provision for such items for ascertaining the true net profit. Means what? Here we know that loss or expense that is going to happen in the future, but we don't know the exact amount. For that, what we have to do? We have to create the provisions for such items for ascertaining the true net profit. Here creating the provisions or to make provisions. So provisions, it means what? It means an amount that is set aside out of profits to meet a known liability or loss, but the amount of that liability is uncertain. So provisions means here we have to set aside the amount out of revenue or profit to meet a known liability or loss. But again here the amount of that liability is uncertain. Clear? So for that we need to estimate or set aside an approximate amount that is based on past experience or best judgments. On the basis of past experience or best judgments, we have to set aside an approximate amount. Clear? So in simple words, we know that something is going to happen, but we don't know the exact amount. So we make a provision for it. Or it means we know that loss or expense happens in the future, but we don't know the exact amount of that loss or expenses. So what we will do? So we will estimate and set aside an approximate amount that is called as provision based on past experience or best judgment. That is what provision. So this is the meaning of provision. Till here it is clear, right? So now let's see one example. So let's say a company has rupees 1 lakh in debtors. For example, company has rupees 1 lakh in debtors. Clear? Rupees 1 lakh in debtors. So debtors. Debtors means what? People or customers who owe money to the business. Means when a business sells goods or services on credit. On credit means payment will come later, not immediately. Clear? Those customers are called debtors. So company has rupees 1 lakh in debtors. And based on past experience, about 5% of them usually don't pay. So based on past experience, 5% of them don't pay, usually don't pay. Here company estimates based on past experience means they may set the provision that 5% of them they don't pay. Clear? So the business expects that 5% might not be received because some customers may fail to pay. So then the company creates a provision for doubtful debts. Then the company creates a provision for doubtful debts. How much amount they will create the provision? That is rupees 5,000. Means 1 lakh into 5%. That is rupees 5,000. 1 lakh into 5%. Clear? Here in this example, see, company has rupees 1 lakh in debtors and based on past experience, about 5% of them usually don't pay. So now company creates a provision for doubtful debts. Means here company knows 5% of people, they are not going to pay. Means usually they don't pay. Means how much they will not pay, they don't know. So on the basis of past experience, they estimate that about 5% of them usually don't pay. Then the company creates a provision for doubtful debts, that is rupees 5,000. On the basis of percentage, we need to calculate, that is 1 lakh into 5%. Here company will receive only rupees 95,000, means 1 lakh minus 5,000. So it is anticipating a possible loss of rupees 5,000, right, and recording it in advance. So the company does not suffer a new loss at that time. Why? Because the money was already kept aside. That is rupees 5,000. That is already money kept aside of rupees 5,000. Clear? So I hope now the meaning of provision is clear to you all. So in simple words, provision means what? Money kept aside for a possible future loss. So when the loss happens, we recover it from the provisions. So this way the loss does not affect the future profits because we already planned for it. We have already set the aside out of profits. Here that is rupees, in this example rupees 5,000 we have set aside. Clear? So I hope this is clear to you all. Now let's see the examples of provisions. What are the examples of provisions? See here, 1 minute. First example is provision for depreciation. Provision for depreciation. Depreciation means what? In the last class we have already discussed every fixed assets like machine, building or furniture or vehicle loses its value over time. Why? Because of use, wear and tear or age. Right? So this fall in value, that is called as depreciation. So now instead of waiting till the asset completely wears out, the business, what they will do, business sets aside some money every year to cover that loss in value. So that money kept aside is called as provision for depreciation. Clear? For example, see here, a company buys a machine for rupees 1 lakh. Means this is a fixed asset, right? After 1 year, the company estimates that, company will estimate based on its past experience, right? The machine's value has reduced by rupees 10,000. They estimates that machine's value, it will reduce by rupees 10,000. Means they also don't know the exact amount. That is what called provision, right? So the company creates a provision for depreciation of rupees 10,000. Rupees 10,000. Clear? I hope this is clear to you all. Now second example is provision for bad and doubtful debts. Here we have already discussed this example. Clear? And third one is provision for taxation. Provision for taxation. It means what? Here every business has to pay the income tax on the profit, right? That it earns during the year. But at the end of accounting year, the exact amount of tax is not yet known. Why? Because the final assessment by the government happens later. So for the safe purpose, the business estimates how much tax it will have to pay and keeps that amount aside from its profit. Clear? That amount known as provision for taxation. Clear? Let's see the example. Company earned a profit of rupees 5 lakh in a year. It expects, clear, it will have to pay 30% of income tax on that profit. So it keeps aside how much amount? 30% of rupees, sorry, not 1,50,000, 5 lakh is rupees 1,50,000. Clear? As provision for taxation. This means company set aside rupees 1,50,000 to pay tax later when the actual amount is confirmed. Clear? So these are some examples of provisions. They are provision for depreciation, provision for bad and doubtful debts, and provision for taxation. Clear? Now let's see the one important point in under provision. 1 minute. See here, it must be noted that amount of provision for expense and loss is a charge against the revenue of the current period. Creation of provision ensures proper matching of revenue and expenses and hence the calculation of true profits. It must be noted that the amount of provision for expense and loss is a charge against the revenue of the current period. Now provision, it is an estimated amount, right? It is the money set aside for expected expenses or losses that are likely to occur in the future, but the amount is uncertain, right? That is what provision. So here provision for expenses and loss, it is a charge against the revenue of the current period. Charge against revenue means when we create a provision, we reduce the revenue of the current accounting period, even if the actual expense or loss has not happened yet, right? This ensures the profit shown is realistic and not overstated. Clear? For example, revenue that is rupees for the year rupees 1 lakh and expected bad debts means that is the provision amount, that is rupees 5,000. Now profit shown in the books how much? 1 lakh minus 5,000, that is rupees 95,000, because here in under provision means we are going to kept aside the amount out of profits. Here profit is rupees 1 lakh and provision we have created, that is rupees 5,000. So profit shown in the books how much? 95,000. Means this is done because accounting follows the matching principle. What it says, which says expenses should be matched with the revenue. They help to earn. Even if the loss or expenses is not yet certain, we anticipate it and adjust the profit accordingly. Clear? That is what it must be noted, that the amount of provision for expense and loss is a charge against the revenue of the current period. Clear? I hope till here it is clear to you all. Now let's see the important part, that is accounting treatment for provisions. Accounting treatment for provisions. Yes, accounting treatment for the provisions. Now see, the accounting treatment of all types of provisions means provisions for depreciation, taxation, and or a provision for repairs and renewals, provision for bad and doubtful debts. That is almost similar. Clear? So therefore I will explain here the accounting treatment, taking up the example for provision for doubtful debts. Clear? I will take the example for provision for doubtful debts. See, as already I explained that when business transaction take place on credit basis means payment done at a later date, debtors account is created, right? So it balance shown on the asset side of the balance sheet. Debtors will comes under the asset side of the balance sheet. Clear? So these debtors may be of three types. Debtors means when a business sells goods on credit, then debtors account is created. Here debtors, they may be of three types. They are debtors means customers who owe money, and bad debts means amount we are sure we cannot collect from the from the people. Clear? That is what bad debts. And doubtful debts means amount we may or may not collect. Bad debts means we are sure. That means we will not going to collect any amount. And doubtful debts, doubtful means amount we may or may not collect. Now here we have to, for the safe purpose, business creates a provision for doubtful debts to show a more realistic value of debtors in books. Clear? So now what is the journal entry to create the provision? Profit and loss account debtor to provision for doubtful debts account. Here we need to enter the amount of provision. We need to debit the profit and loss account, that shows expense, and credit the provision for doubtful debts, that shows the liability. Clear? Now let's see one example. Here trial balance extract sundry debtors of rupees 68,000. Here In trial balance, sundry debtor shows the amount of rupees 68,000. Now let's see the additional information. Bad debts proved, that is 8,000 rupees, but not yet recorded. Bad debts proved. It means what? Bad debts proved means after repeated reminders, you find that debtors balance sheet closed and the money is not yet collected. What I said, bad debts means what? Here amount we are sure we cannot collect. Means after repeated reminders also they have not paid the amount. Now what? So for that what we have to do now? We have to write off this amount of rupees 8,000. But here they said they not yet recorded. So that we have to write off rupees 8,000 as bad debts. Clear? Now write off. Write off means what? Removing the amount from the books because it is no longer considered recoverable. Clear? That is the meaning of write off. Now second information is provision to be maintained 10% of debtors. Means here 10% of rupees 10% of debtors we have to kept aside as provision. Clear? Now let's see first journal entry for writing off the bad debts. Bad debts account debtor to sundry debtors account being bad debts written off, that is rupees 8,000. Clear? Because they are proved. Means company it is not going to collect amount of rupees 8,000. Means for now we have to remove this amount from the books, that is rupees 8,000. Now the balance of debtors, how much? After removing rupees 8,000, 68,000 minus 8,000 equals to rupees 60,000. Now debtors value is rupees 60,000. On that we need to calculate the provision. Now let's calculate the provision for doubtful debts. That is 10% of rupees 60,000. Therefore, you should be very careful while solving the problems. Directly, you cannot calculate the provisions on 68,000. On 68,000 because here bad debts they are proved, that is rupees 8,000. We have to remove this rupees 8,000. Now remaining balance of debtors, that is rupees 60,000. On 60,000 we have to calculate the provision. That is 10% of 60,000 is rupees 66,000. See, provision to be maintained 10% of debtors. So now what is the journal entry? Profit and loss account debtor to provision for doubtful debts account, that is rupees 6,000 being creating provision for doubtful debts. Now what is the value of debtors in the balance sheet? So the final value in balance sheet is 60,000 minus 6,000. We have kept aside as provision for, that is rupees. So remaining value of debtors, that is rupees 54,000. That is shown under asset side of the balance sheet. That is means we are going to receive only rupees 54,000. Clear? So I hope this example is also clear to you all. Now last point is, see here, provision for doubtful debts is shown as deduction from the amount of sundry debtors and provision for depreciation as a deduction from the concerned asset, means fixed asset, that is shown on the asset side of the balance sheet. And provision for taxes and provision for repairs and renewals, that is shown on the liability side of the balance sheet. Why? Because see, for example, provision for taxes, that is amount to be paid to tax authorities in the future. Means company is going to pay the tax, going to pay the amount or tax to the authorities in the future. And provision for repairs and renewals means amount set aside for future repairs. Means we don't know the exact amount. That's why we will set aside for future repairs or renewals of asset. Clear? Means company is going to pay. That's why we have to shown on the liability side of the balance sheet. That is provision for taxes and provision for repairs and renewals. Clear? So I hope this provision concept is clear to you all. If not, please leave a comment. And in the next class, we are going to discuss about reserves. Clear? If you have any comment, please leave a comment. Thank you.